Hi guys, happy 5M Monday. I am so excited to be here today and I'm just looking forward to continuing on our journey of the 5Ms, which will help you change your life like it did mine. So last week we talked about creating a financial freedom day and just basically dreaming big and writing it down and turning it into a vision board. And hopefully as you were going through that exercise, you had a really big why attached to all the things you chose. Perhaps you were looking forward to looking after your family, or you had some big dream experience that you wanted to do. Maybe you want to move to a foreign country, or just do something really cool like water ski. There's so many things that you can do in this world. There's really no limitations to that. The only limitation is your mind. And that's why this exercise is so important. Dream big. So once you get that all done, the next thing to do is what I call a gap analysis. So what you need to do is look at where you are now and where you want to be. So you've already got your where you want to be. So what you want to do is convert those, your where you want to be, into numbers. So how much is it going to cost you to have that house, to have that car, to be able to look after your family, to pay for education for your children? What is that number look like? And then, if you need to do some research, absolutely do. Like, how much does that car cost? Have you ever priced it? And once you've boiled it down to, like how much is it going to cost to maintain all those things, you're going to have a number, and you're going to convert that into a monthly budget. So hopefully you've already got a budget out there. If you don't, you'll need to start one for sure, because rich people count their money. They know where their money's going. So if you want to be rich in this world, you need to know where your money's going. You need to be able to manage that. And if you haven't done that yet, really you need to start doing that. So start keeping track of all your expenses, put them in a nice little spreadsheet. And see, watch your money going in and out. That's really the first step to knowing where you are right now. So you need to do an inventory. How much debt do you have on each credit card? Or do you have a car loan or a mortgage? Or, how much are your monthly bills working out per month? And, we are going into what's being said is going to be probably the greatest depression since 1929. So all the numbers need to be factored higher than they are right now, because there's a good chance that our expenses are going to be dramatically increasing in the next few years. So look at the numbers right now. You're going to come up with that number for your future, and you're going to sit down and look at where you are now. So if that means you need to start tracking your expenses, you need to do that now. Then you need to come up with a plan to get there. So we already know where we want to go. And so we've got a starting point, because we need to know where we are now. So your job this week is to figure that out. Where are you now, and what's the gap in between your now and where you want to go? Okay, so once you do that, then you're going to be able to create a roadmap to getting to where you want to go. All right, so this can take some time, especially if you've never done it before, if you're not a budgeter. I myself am a spreadsheet geek. And the reason for that is because I grew up really poor, and I really did have to pinch my pennies. And I really wanted to go to university, like in a big way. And I knew my mom was poor. My father had left, didn't want to give me any money for school. So I knew I had to get there myself. And so I did the work. I mean, I started taking a job when I was 14 and started saving all my money, putting away as much as I could. And Unfortunately, when I got to university, I found all the money that I saved only got me through one semester. So 5 years of savings got me through one semester. So, what do I do? So obviously, like most poor students out there, I took student loans. And so when I finally did get my degree, and boy, was that a journey in and of itself, totally worth it. Finally got that degree. I left school with a huge debt, right? So I'm sure many of you can relate to that. However, I was really smart with my money because throughout school, I had to really budget every penny. I prioritized my expenses. There were certain things that were absolutely the most important to pay, and that was my tuition and the roof over my head was really, really important as well. So down low on the list was things like food, entertainment, and yeah, in university, entertainment's huge, right? So you go out with your friends, you have a few drinks. I literally stuck to a budget of $12 a week for alcohol. And you know what? I'm a cheap drunk, so it worked, right? So I started learning this money thing really early on simply because I didn't have it. And so if you also are in a situation where you don't have it, perhaps you're in maybe running away from your money problems. I know a ton of people who are afraid to open their bills because they don't want to pay their bills off or they don't have the money to. So what they do is just hide it away. Maybe it'll go away. And I can tell you, when you run away from your problems, they follow you. And not only do they follow you, they get bigger. Okay, so all you're doing is digging yourself a bigger and bigger hole. And the only way to get out of it is to stop and look at it head on and tackle it head on. So because we're going into probably the worst recession depression that we've seen in, almost 100 years, I think it's more important than ever for everyone to take control over their finances. And even if you're somebody who's got lots of money, who's always been very wealthy, very rich, I also know a lot of people who do have lots of investments who on the surface look like they're doing really well because, hey, they've got hundreds of properties and tons of stocks. They're really not managing them very well. And they're finding now that all the, insurance is going up, property taxes are going up. There is a very good chance that mortgage rates might go up as well. All of our expenses are going up. Some of them haven't actually factored that into their calculations when they're buying properties. And they're definitely maybe not doing what they need to shore up their investments right now. And I think that is something that real estate investors and all kinds of investors need to be doing right now. And that's why we're seeing a big jump. Some of the smart investors right now are jumping onto things like gold because, with all this money being printed right now, paper money is being devalued at a crazy rate. So pretty soon money's not going to mean a whole lot because you're going to need a truckload of money to buy a small thing like a loaf of bread, like they did in the Great Depression. So what is really, really important is to focus on having some assets to pay down debt. Make sure your expenses are as low as they possibly can be so that you've got a buffer. Okay, factor in things like you not having a job, okay? Because unemployment rates are skyrocketing right now and they're only going to get bigger. Personal bankruptcies, corporate bankruptcies, they're growing also at a really quick rate. And all of this stuff has an impact on the money markets. So as people start defaulting on their mortgages, as they start defaulting on their business loans, what happens is that the banking system will start to collapse because, as we all know, business owners, we need to make money to stay alive. So if everybody starts to default and go bankrupt, which means they're not paying the banks what they promised, the banks are going to start losing money. And so there's a number of things that can happen when the banks lose money. Number one is they're going to have to find a way to bring more money in, which means probably the first thing they're going to do is raise those interest rates. Okay, so anybody who's got a loan out there, who's been approved, who's got a contract that yes, they're going to pay it back, guess what? Your interest rates are going to go up. How quickly? Well, it could be really quick, because if bankruptcies jump up really quick, then interest rates could jump up really quick. Now, I know all of you are saying, oh, but the Bank of Canada is going to be keeping their rates low. Well, yeah, probably in the short term they will. However, the Bank of Canada rate is set for the borrowing of banks. Okay, so basically banks and anybody who's lending money to other people, they're the ones who get that rate. Okay, so that's why your mortgage is 3 or 4%, and the Bank of Canada rate right now is what, 0.2, 0.5%? Why is it that you're paying 3 or 4% right now? Well, you're not paying that 0.25%, right? Because anyone who's lending money has to make money. So they always have a markup, right? So when they start losing money on defaults, they're going to have to mark up some more, right? It's really simple supply and demand, basic economics. This goes for any industry. So we're going to be seeing a lot of that in all kinds of commodities very shortly. I know I've already seen a jump in food prices, and geez, my housing expenses have jumped as well in a massive way. Electricity's gone up at least 30%. I mean, there's a whole bunch of things that are just starting to snowball right now, and sitting back and kind of ignoring them is really just going to put you in a hard spot. Okay, so you really need to look at your expenses right now, where you can cut, and how you can maximize what you're doing right now. And then you need to look at investing. Investing is huge. It's going to be what makes you not only survive but thrive throughout the Depression. Now, when the Depression happened in 1929, there were so many people that lost money, right? So they lost money in the stock market, they lost money on their houses, people were walking away from their own houses because they couldn't pay them. And, you know, when that happens now, we need to look at how to prevent that, first of all. But at that time, there was also a really large number of people that took advantage of this situation and ended up billionaires. And that's what I think we need to focus on right now, right? So someone like myself, I'm kind of excited. I know it's really depressing for a lot of people. And yeah, if you're not taking hold of your finances, you should be depressed, because chances are you're not going to do so well. However, if you take hold of your finances and you do what it takes to shore up your security right now, and you start investing in real hard assets, like real estate, like equity, stocks, good ones, you got to watch out which ones you buy. A lot of people are investing in things like gold and silver. There's a lot of speculation on what's going to happen to the financial system with the world printing money like crazy. There's a very good chance that that whole system will collapse. So what is money going to look like? Are we going to go back to barter trade? Are we going to go to Bitcoin? Are we going to be, using gold? What are we going to do? Nobody really knows, but all the rich people out there are dumping their money in safe havens. Things that they are avoiding. So yes, I'm from the Guru Intelligence Network, and I follow the gurus. I want to know what they're doing, because they're the ones making a lot of money. They're the ones who know how to protect it. They're the ones who know how to avoid taxes. I want to know what they're doing. So this is what the Guru Intelligence Network is all about. And So what I'm seeing them doing is, number one, they're saying you got to avoid the bond market, especially the corporate bond market, because there's a good chance a lot of those bonds are going to default, basically become junk bonds and worthless, because those bonds are being handed out by companies that are on the verge of bankruptcy. So if they go bankrupt, which is likely, because why would they be selling bonds if they weren't? Then they go under, they go bankrupt, and when you go bankrupt, you don't have to pay anyone. So guess what happens to your bond money? It evaporates, right? So the gurus are saying stay away from corporate bonds, anything that is maybe tied to companies that may go bankrupt, not good. And they're also saying that you need to start investing in things like gold, like stocks, but you need to wait for the right time. So right now, if I've been studying the stock market, and all the gurus are saying right now everything's overheated. People are trying to find ways to dump their money. 85% of the stock market is actually being held by large, huge funds like RSPs, so retirement funds, mutual funds, group stocks, essentially, under that umbrella of group stocks, managed money. So if you've got an RSP or a pension fund that you don't choose the stocks in, that is a managed fund. So you have no control over what they do with that money. And in fact, their mandate is to actually use the money. So whether they buy a stock that is at the right price actually makes no difference, because they have to buy it because they have all this money and it has to be tied up in something. Okay, so what happens is it's driving the prices of the stocks up artificially, right? Because there's so much demand. People are just handing over their money to fund managers, and fund managers just have to dump it in something, regardless if it's good or not. So that's putting your money at risk, a huge risk, actually. And there's a real danger that once the bond market falls, once COVID fear starts, once the real impact of the economy starts to hit, so as soon as those as soon as the government bailouts, essentially, and all those incentives start to pull back, because they will have to at some point, we're going to start seeing the real impact on the economy. Now we're already seeing it. I don't know why the media is not really paying too much attention to, bankruptcies upwards of 20-30% already, job losses over 10%. Like, we've got over 10% of the population who is unemployed right now. Okay, they're living off the CERB or the CEWS. And what happens when that ends, right? What's going to happen to all these people are going to have no incomes, right? So it's going to be disaster. So we need to start to take control of our finances. And I'm really glad I started doing that last year. I started going into learning about the stock market. And it really opened my mind, because as a real estate investor, we've got sort of this, I'm going to say, kind of a biased point of view. And I was stuck in that biased point of view for a long, long time. I mean, I've been investing in real estate since 2000. And I've joined the Real Estate Investment Network in 2012, and I love the Real Estate Investment Network. They're awesome. They have a lot of research on real estate investing, and it has worked really, really well for me. Even though I've had some downturns and recently had to start over due to a personal situation, the real estate investing stuff is doing really well. I am really worried about my fellow investors, though, who aren't shoring up their investments right now, because they could find themselves in trouble. And these are the people who are supplying housing, right now. So if you're someone who doesn't own your own home, which is almost everyone, if you have a mortgage, you don't own your home. Okay, so if you're renting, you don't own your home. Your roof is not secure if you don't own it. Okay, so my roof right here, I tell you, I paid for it in cash, and there's a reason for that. I don't want someone else owning my home. Okay, and I feel somewhat secure right now, not really, but somewhat secure that no one can walk in and take my home away from me. However, majority of people are not in that situation. They're not in a situation where they can't get kicked out of their properties because well, now the landlord can't pay the bills because now the tenant can't pay their rent. So now the landlord's defaulting on their mortgage and they're going to have to take that property away. So now we're losing housing stock. Okay, so where's new housing going to come from? Well, it's certainly not going to come from new real estate investment. And the reason I say that is because our new rules, stress test rules, and there's a whole bunch of new tax rules that are coming in that are really impacting the ability for investors to buy new properties. Okay, and that is a problem for you, the renter. Believe it or not, if the government tries to kill the ability for an investor to buy properties, it also kills your ability to find a home and a quality home. If rents go down, which they may, they may go down in the short term, but I think they're actually going to go up in the long term because once we start getting a whole bunch of defaults and mortgages and people start walking away from their houses and people don't have money to put into them, you're going to start seeing a drop in quality of housing, and there's going to be a crunch in housing too, not enough housing, and so the rent is going to jump, and the quality of the places you live in is going to go down. Okay, and that's all based on the current disincentives that our wonderful government's doing to us real estate investors, which has gotten me stuck. And I'm not the only one. There's a lot of real estate investors out there that can't get a mortgage, have the inability to buy new properties, and looking at the stress test rules right now, and with everything going up, it's actually pretty tough to find properties that cash flow right now in many cities. I'm in Calgary right now, and I'm looking at properties that are on the market right now. Their prices are much higher than they should be to be in my cash flow zone. So I'm not buying right now. Even if I did, I couldn't get a mortgage. So yes, I know I always get from real estate investors, get a joint venture partner. But right now, you need to find a joint venture partner that can survive this downturn, right? Because you don't want to get tied into somebody who maybe doesn't have the right mindset, who has false expectations, and maybe will get in trouble themselves because they might lose their job. There's all kinds of things that can happen. So until I find somebody who I feel comfortable with to joint venture with, I personally am not going to go down that route. I have had problems with joint ventures in the past, and not done correctly. They can actually cost you more money than you can make. So I find joint ventures actually quite risky personally. And I know a lot of real estate investors have had really great success with them, and that's awesome. And I'm all for that. It's just for my situation, it's not. So for me, I personally would rather be in control of my own investments. And that is part of the reason I went into stocks. So I started learning about stocks when I got introduced to Phil Town at a Tony Robbins workshop in Calgary last August. So yeah, over a year ago. And it was really, really great. It opened my eyes. I was like, I'm looking for a way to increase my investments because I haven't reached my freedom day yet. And I want to do that. I don't want to stop. I don't want to give up. I'm not a person who gives up. So I don't give up easily. I go. So I was looking for another way to expand my horizons. And so Phil Town got up on the stage and he was really great, wearing his debonair suit. And he's like, I came from nothing. I was making $4,000 a year as a river guide. And, just by dumb luck, he saves this guy's life in a raft expedition because he was a river guide. And this guy, was so grateful for him for saving his life that he taught him how to invest in stocks like Warren Buffett. And so he went and he invested. He learned how to do this stuff. He invested $1,000, and 5 years later, he was well into his first million and just growing. He's now got his freedom day and he's enjoying his life. He's trying to teach as many people as possible this system, and I learned it and it's fantastic. And I'll tell you that I've already more than doubled my returns on it. And I look forward to getting my freedom day with both my real estate investments and my stocks. I know there's a rivalry between who's better. Is it real estate or stocks? I don't think there should be a rivalry, to be honest, because there's no reason why you can't do both. Okay, so in stock investing, contrary to what Wall Street wants you to believe, stock investing is actually not hard. Anyone can do this. Anyone can pick it up. It's pretty easy. There's a checklist that you just need to follow, and you just need to know when to buy, hold, and sell. And it's actually pretty easy to make money in the stock market. However, it's not a short-term thing. Okay, so anything that promises to make you money in a short period of time, that's gambling. Okay, it's unrealistic expectations. Just like I was saying, a lot of my partners have had unrealistic expectations. Well, that's probably the number one thing that kills people's investments, is that they expect to have all this money come in within a really short period of time. And that, my friends, is called winning the lottery. Okay, and we know the odds of winning the lottery, they're not very good. Okay, but the odds of winning the stock market, if you're willing to learn and keep up with your stocks, it only really takes 15 minutes a week. And that's why I'm talking to you right now, because it's not taking me all day every day to look at my stock portfolio to know that I'm doing well. I've got my plan and I'm just waiting for my stocks to hit the price I want to buy them at. I'm keeping up with how they're doing right now, looking at the quarterly reports and the earnings calls, rerunning my numbers every quarter. It's really not a lot of work. And it's something that will definitely get me to where I'm going. And for me, it's less stress than some of my real estate investments because I don't have to deal with people. I just have to deal with the online broker. So, which, I mean, if you've got a good broker, you've got a good platform, that's not a lot of stress at all. So I really want you to encourage you to get out there, develop that freedom day. I want you to look at where you are now. If you haven't done so already, you need to start tracking your expenses. And then after your first month, I want you to start take all that data that you've collected for all your expenses. I want you to create a budget. Okay, and that budget's going to account for everything that you spend. I want you to take your income, compare it to what's going out. Okay, so are you spending more money than you're making? That's a big question. And if you are, well, first of all, you need to find out how to get yourself in line with not spending more money than you're making, okay? And how do you cut your expenses so you've got enough money to save and invest, okay? There's lots of ways to invest money without having real money. but it's much better to have cash. So I know if you've listened to any kind of financial advisor, they'll always say, you know, you should save 10% of your check, pay yourself first. And that is so true. Okay. Paying yourself first can make the difference between you going broke and being a millionaire in 5 years. Okay. So this is a really important thing to do. If you need help, I have personal coaching and I've got my own personal budget template. I can walk you through how to do that. I can certainly help you along your journey there. If you're interested in learning stocks, like I've got a course right now that teaches the Warren Buffett method. It's called the 5M strategy. So basically that one is Phil Town's course that he teaches with a twist. So essentially what I've rolled into this course is all my experience in real estate as well, because stocks and real estate aren't that different, turns out. Okay, so if you know real estate, you should have no trouble picking up on stock investing either. And I've got a lot of other experiences that I tie into that. So it is a little different from Phil Town's teachings, although the core of the material is the same. My course also gives you coaching along the way. So it's not just an online course where you download the videos. I will be holding you accountable to doing your homework. So I want to see you get there. I want to see what is your freedom day? I want to see you do that. 5-10 years from now, I want to see you sitting on the beach, if that's your dream, and doing what you said is your freedom day. I want to help you get there. So if you are interested in taking control of your finances and learning about investing in stocks, I can even give some tips on real estate as well. Do click the link below, and that will give you access to our free live stream that is coming up at August 22nd and 23rd. We're going to be talking about where to put your money in a time of crisis, what things we need to look for right now. It's going to be so exciting. I've got some really exciting guests coming up. And I think all of you will really enjoy it and get a lot from it. It may even change your life, because there's some information that's going to be in this live stream that no one else is talking about. So if you want to have that edge on the market, do click the link before and sign up for that live stream. All right. So we'll talk to you soon. Have a good day. Bye-bye.